A very good afternoon to everyone who's joined us today for uLaw's webinar. Today's webinar topic is going to be on Disbursements Demystified, and I welcome everyone who's joined us both using the web link as well as those who have dialed into the phone system. I do highly recommend that if you are listening in using a computer's link, that if you can, please do dial into the phone numbers provided both in your email as well as in the chat window, and for better quality of audio. Now, today's webinar is accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. And I repeat that today's webinar is accredited for 1 hour of CPD credits in the provinces of Ontario, British Columbia, and New Brunswick, and it's going to be in the topic Disbursements Demystified, and that's the same topic or title that you would search up in your individual jurisdictional law society portals to report upon, of course, the CPD. I kindly request everyone to mute your phone lines as well as use the chat window to ask any specific questions that you may have with regarding to today's webinar. Now, like every other uLaw webinar, today's webinar has a specific agenda, and we're going to be covering the following topics in today's webinar, leaving some time at the end to actually do a live demonstration of using the uLaw product, if you will, to illustrate or demonstrate some of the key concepts and agenda topics that we're going to be covering. Okay? So if you really look at our agenda, what are the key aspects of today's webinar? We're going to be talking about what are disbursements and how does a legal firm manage them. In our webinar previous week, we had actually covered a broader subject or topic around legal office expense management. And we spoke about how there are two major categories of expenses that a legal office has to deal with on a day-to-day basis. One of them was, of course, the disbursements, which were client matter-specific expenses that you pay for that are recoverable in nature. And there was the other category of legal office expenses that were related to your office expenses that were more to keep the lights on, to manage and run your business. Now, today's CPD is, of course, a deeper dive into the first category of expense, and that is around disbursements, specifically talking about the areas and how you manage these disbursements. So for those who just joined us, today's webinar's title is Disbursements Demystified. It's accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick, and I have mentioned that in our chat window as well. Okay. I'm going to... Perfect. So I think we have invited quite a bit of our members today for the webinar. So after we talk about what are disbursements and how do you manage them, we then look in different subsets of that same topic, such as how do you use the trust account to pay for these disbursements? Or rather, why not use the trust account to actually pay for these disbursements? And what are some of the benefits that you actually gain out of using the trust account to pay for these disbursements? And then we'll talk about how do you manage disbursements that are paid using your general bank account. A good majority of legal professionals, including uLaw customers, of course, use the general account to pay for office expenses. So we'll kind of take a quick look at the differences between paying disbursements out of your trust account versus using disbursements out of the general account. Once again, today's webinar's title is Disbursements Demystified. And finally, we'll talk about some of the types of disbursements, if you will, right? Such as billable. A good example of billable disbursements could be your court fee or application fee. Unit rate expenses, such as photocopies, fax, mileage. This could be travel mileage for yourself or your assistant, anyone else involved, or other legal professionals that are involved in executing a particular matter. We'll look at travel time as an example, even recovery of expense and outsourced work. So if, let's say, you're doing a stand-in, you're actually using a third-party representation, let's say to visit court because you couldn't make it, maybe it's in a different city, and if you're outsourcing certain aspects that are well documented and well communicated to the client and agreed upon, those are types of disbursements that are expenses related to the matter itself that we'll talk about. That's a good example of a type of disbursement as well. Okay? And last but not the least, having capture, we'll look at how you capture this information. By the end of the day, what are the expectations from the Law Society when it comes to how you depict these transactions called disbursements in your bookkeeping? So what are the ledgers and journals and other documents in which the Law Society expects you to tell the story around what exactly happened and the audit trail of those disbursement transactions? Okay? So within a tight-packed 1 hour, we're going to be covering a good majority of these topics rather, and as I mentioned earlier, hopefully leaving some time to walk you through uLawPractice as an example of how you would go about executing these agenda items. Again, for those who did join us a bit late today, today's webinar topic is Disbursements Demystified, and it's accredited for 1 hour of CPD credits, of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. Thank you very much. So let's start with what is a disbursement and what does it mean to your legal business. A disbursement, of course, is the act of paying out, or what you call is disbursing money that are paid specific to a legal file, specific to a client and a client matter that you pay on behalf of that client prior to recovering that payment or that expense from the client itself. Okay? So in terms of a layman's term, these are expenses that are incurred for your client by your legal office. From an accounting perspective, what that really means is that you have the responsibility to keep a record of that transaction in your books, as they call it, so that at the end of the week, month, or a stipulated time, you are able to manage, balance the transactions and the accounts, as well as the act of generating an invoice and recovering that expense. From a Law Society's perspective, the expectation is that you as a legal firm manage and maintain proper bookkeeping for all these transactions. How do you manage these disbursements and what does it really take for your legal firm? What best practices, process can you follow so that you manage these disbursements on a timely basis? One of the most fundamental process or best practices that we recommend across all our webinars, in our conversations with our clients, and also what we hear from our clients and leaders in this field are one important step that you can take is capturing the moment. Whether that's expense related to your office, whether that's expenses related to your client, capturing the moment as and when it happens. If, for whatever reason, you're a very busy professional, you really can do it as and when it happens, at least have a process or a discipline to record the activity of these disbursements as close as possible to that timeline. So if a disbursement occurred this morning, if possible, make it a discipline for either yourself, someone else in your firm, to be able to record and capture that transaction by end of the particular day. Worst case, captured within the next 2 days, so that the transaction and the details are a lot more fresh in your memory. So when you capture the details, then comes, really the devil is in the details. So what level of details are you really required to capture? What details and what you've captured need to be reflected in the Law Society's required documentation? So that's something that we'll talk next. But to kind of give you a gist of the types of details that they actually ask for, it includes details such as, okay, I know there's quite a few questions coming in real fast, but I will try and answer them as I go along. Information such as the date. So for example, when was that particular disbursement paid out? So was this today's date, the 18th of October? Was this a previous date if it's happened in the past? How did you pay for this disbursement? That's a very tricky question, because there's various different situations for which you may have used various vehicles of payment methodologies to pay for this. Okay? But it's important that you do capture this particular piece of information, which is very important, which is how did you pay for it? First and foremost, was this a disbursement that was paid out of your trust account? Or did you pay this out of any of the other general accounts that you have? If it was paid out of your general account, then a subcategory of that is really, which general account did you pay that disbursement out of? Was this your business credit card? Was this your general account, which is your general checking account for your business? Again, these are all business related. Or another aspect or vehicle of payment could be what we title as the owner's pocket, which is essentially your own personal money that you may have used to pay on behalf of a client on behalf of your firm. So Roger Moore, the legal professional, may have forgotten his wallet, may have forgotten his checkbook, and may just have $100 or $200 of cash. And let's say there was a set of documents that had to be photocopied, and he actually indeed used his personal money to pay for those photocopies on behalf of this matter, then that's also recorded as a general disbursement. It's just that you now have the due diligence to capture it as money have been paid out from your own pocket, which really means that the business then owes Roger Moore, the individual, that money back. Okay? Moving on to the other aspects of these details. So you've recorded the date, you've recorded how was this disbursement paid for, and very important is what was the reason for that particular disbursement. Okay? So if it's an actual, that's great, but what was it paid for? Was it a court fee? Was this an application fee? Was this any other fees that was related to that particular matter? If it was photocopies, then how many of those photocopies? So really, what was the reason for that expense? All of these details, of course, help you with documenting the ledgers and journals that are required by the Law Society. But more important than that, they are very essential for you and your firm to be able to reconcile your accounts, have clarity as you look at that transaction maybe a month later when you're reconciling, to have that thought clarity of what was that transaction all about. So the more details you can provide, the better it serves your memory to recollect, and also helps you with reconciling it with your bank account. Okay. Now, disbursement being the expense related to a specific client, and more specifically a client matter, it's also important as part of those details to capture the client's name, as well as more specifically the matter or the file number that this particular disbursement is rendered for. What was it related to? Okay. Some other aspects as we list down here is if it was paid from general account, then really what is the invoice cycle that you need to introduce or include this particular disbursement? right? Because one of the most important steps after you've captured all of the details is to be able to reflect this in an invoice so that you can actually confidently tell your customer what is it that you're looking to recover and why is it that you're looking to recover. And that is done through that of the invoice document. Now, a prerequisite, of course, and we've discussed this in some previous webinars, a very important prerequisite is that of a retainer letter or an engagement letter, which is really the starting point of any client relationship. And that's the document in which you as the legal professional or the legal firm outline all of the responsibilities expected from both parties. So ensuring that you as a legal firm have clearly outlined all of the fees and disbursements that are to be expected as part of this particular matter and actually delivering this file successfully for that client, and also defining the roles and responsibilities of the client, which is if there's only general accounts related, you may actually have a particular policy or a specific aspect within the document that says that you expect the client to pay you for your invoices within, say, 15 days. Right? What is the real days on sale that you expect them to pay you by? And if they didn't pay you within that time, what are the stipulations of that? Once that's been established, this particular channel of capturing disbursement transaction, recording it, generating it, and making it part of an invoice, sending it to your customer, and using that to recover the expense makes it easier. Okay? So we spoke about this really in terms of, because disbursements, the nature of disbursement is that it's a recoverable expense, it becomes even more important for your legal firm to take every step possible to capture every detail as minute as possible so that it's easier for you to recover it. Because if you do not recover it, then it's going to affect your bottom line. Because if you paid for a certain expense, you paid for that $100 court fee, and if you do not capture it in time, and if you do not report it in time through an invoice, then you may not sometimes be able to recover that expense, right? So if that happened today and you're going back to the customer after 6 months saying that, hey, remember that disbursement that happened in October, I'm actually including it in this particular cycle, then the customer may actually not agree to pay you because you did not send that invoice in time. Because then what happens is that that $100 is your loss. It becomes part of your expense that affects the profit and loss of your firm. Okay, so it's very important that you capture the disbursement transactions in time, generate the invoice as agreed upon in your engagement letter, and make sure that you have a process to follow up and ensure that you get paid on time. And initially we spoke about when it comes to disbursements, a legal firm has two different ways that they can actually handle it. One is paying for these disbursements straight out of your trust account. And what that really means is by using the trust account, either accepting a retainer which includes the disbursement fees, you are actually mitigating the risk of not getting paid or not being able to recover that expense. Okay? Because really what happens is if you don't have a trust, you spent the $100 on a court fee, you generate that invoice in a timely manner, and you send it to the client, and for whatever reason the client never pays you for it, then that's the risk of non-payment that you take as a legal firm in that scenario. But if you're dealing with trust money where you're saying, I need this retainer, which is money ahead of time for me to even start getting started with this engagement, so pay me my, maybe it's a $1,000 retainer plus a $200 extra for the disbursements that you recognize that may be required as part of the file. And so you accept really a $1,200 retainer up front, and you use that as the vehicle to pay for those disbursements. So you write a trust check, if you will, for the same court fee or an application fee, where money comes right off your trust account, where you do not have to technically generate an invoice and wait for that money to be paid. Because now you can actually just generate the invoice for moving the trust funds from the trust account into the general account. So that's what they call as the eligible trust transfer. Okay? So why not pay straight from trust? Disbursement types, especially actuals, such as court fee, application fee, are good candidates for you to explore paying straight out of the trust account. Because when you do pay out of the trust account, you don't have to recover the expense, if you will. You're not waiting on the customer to pay you. You've already got that fund preset in your retainer to be repurposed. And, if it's not your money after all, why not use the trust account so that it's easier on your own bookkeeping and mitigates some of that risk of non-payment. Okay? So regardless of whether you pay out of the trust account or whether you pay out of the general account, the pieces of information that you need to capture about that disbursement does not change. You still are required to capture the date. You're still required to capture all those other particulars that we spoke about earlier. The date, what was the total amount, how did you pay for it, what specific client and matter was this disbursement related to, and how much was any provincial taxes, if included, were part of that expense, right? And this is an important slide where it again talks about the retainer and the engagement itself, and the prerequisites that we discussed around the engagement or the retainer letter. And the question really is, when do you as a legal firm recover any disbursement? Depending on the nature of a particular matter and the agreed upon retainer or engagement letter, different legal firms have different styles of how and when they actually generate an invoice or capture disbursements, report it, and recover it. For example, if it's a quick and easy matter which has a very short shelf life in terms of from the time of signing the retainer letter to when it actually gets completed and closed, if it's, let's say, let's say it's a short time, you may actually generate that invoice, include the disbursements as and when they happen. Now, certain law firms who work with corporate clients who are on a monthly retainer may actually generate all the disbursements in that particular month and add it to that final monthly invoice that they send it to that client, because the client expects a monthly invoice, including the fees and any disbursements that may have been paid for. Okay? So it really comes down to the nature of the business, and bottom line comes down to what has been agreed with the customer as the agreed cycle in which you generate these disbursement invoices. The details of the invoice and the disbursement still remain to be the same. And I repeat that because it does not, what goes into the disbursement details does not change the cycle and vice versa. Okay? The importance, of course, between the trust account and paying for disbursements out of the trust account and paying for disbursements out of the general account, one last time really is, when it comes to trust, you don't have to recover the expense. You're basically showcasing that you have used it and the money is taken directly out of the trust account, which reduces the total amount of trust receipt. And finally, you're able to, whereas in the general account, of course, you would have to pay for it in advance, include it in that invoice, and wait for that customer to pay you, provided that there's no trust involved. And the reason why we separate that as well is the Law Society also expects you to produce the appropriate ledgers and journals depending upon the accounts used. So the Law Society does expect a trust disbursement journal, a general, disbursement journal, and ledger documents, fee books, etc. that really tell the story. We spoke about this briefly in one of our previous slides, but here's a quick snapshot. And of course, this particular webinar is being recorded and will be available for you to consume by early next week. Some of the types of disbursements that you may want to consider if you're looking between, should I be using trust account or general account? Here's a quick snapshot of some best practices that you may want to keep in mind. So as a thumb rule, if it's a disbursement that is really recovering on actuals, then you have the opportunity to use both the trust and general account. If there's a recovery of the expense or the disbursement in this case with either a profit or a loss margin, then strictly use the general account to pay for it. And that's the major difference. When it comes to billable, of course, you can use both trust and general. Unit rate, mileage, travel time, we recommend that you use the general disbursement route. So on a day-to-day basis, of course, now you've looked at how you can capture these disbursements. First and foremost, define that in your retainer letter as step one, and then have a process to capture it as and when it happens, whether that's a manual process or whether it's a legal accounting system or any other system that we use to capture it, whether it's on your mobile phone, on a laptop, desktop, doesn't matter. So you have a best practice to capture these disbursements. And then you have a proper cycle within which you generate the invoice that includes this particular transaction so that you can recover this in time. And once you've done all of this, kind of the last step in terms of a very subliminal task that happens behind the scene is at the end of the month when you actually do your reconciliation, there are, of course, a bunch of Law Society documents that you generate alongside that reconciliation statement. These are expectations from the Law Society so that on a monthly basis at the least, they are able to capture a history or a story of what's happened with your legal firm, both for fees and disbursements, to ensure that there is compliance built right in your practice from day one. During an audit, for example, the auditor may actually ask you for disbursement ledgers, both for trust and general. Of course, if you never used trust, that would be an empty document. Well, that's perfectly fine. And if you're only using general, of course, that would have all the transactions related to all the disbursements that you've had, right? And you also have the journal documents, apart from the ledgers, that are to be maintained as well. And another important document that captures the disbursements, including any jurisdictional taxes that were paid for, is the fee book. That's another document apart from the ledgers and journals that you need to report on. And there it is. So in a particular fee book, not only are you capturing the fees that were included, so your legal fees, but of course as part of that invoice, you're also capturing if there are any disbursements that were billed and the provincial taxes. And when we really talk about different types of systems that a legal professional could use in today's day and age, we spoke about using a manual process. We have, you have legal professionals who use manual processes to capture this information, an Excel sheet, a Word document, whatever works for you. But when we talk about saving time, having that competitive edge, and being able to repurpose that saved time to be more efficient in your business process, as well as delivering services faster, more effectively to your customers too, we often think about tools that can actually help you save time as well as take these tasks get done faster in a repetitive process. So legal accounting systems are by far one of an important integral part of legal office because it helps you not only capture the information in time, but it also gives you all of the important Law Society documents, ledgers, and journals that you don't have to worry about generating. Because if it's a manual process, of course, there's a template that the Law Society provides you. By more, you are, of course, able to generate those documents on a manual basis. But, of course, you would rather use that time to be more proactive and productive in other things that you can do to maybe serve more clients. And what some of the benefits that the legal accounting systems provide you is, apart from capturing or recording these events that happen as and when they do happen, is ensuring that you have a good bookkeeping of all the financial records and documents that are associated with it. Okay? And where it comes down from an audit perspective, some of the top things that they're looking for are accountability, so that you've done your tasks across your firm, whether it's a sole practitioner running his or her business individually, if it's a growing legal firm with a few colleagues working together, or if it's a large law firm that's working together as a cohesive team. It's important that every participant is accountable for his or her own action, and comes down to compliance with regards to the appropriate documents that need to be submitted or presented, rather, as and when it's being asked. So if you can use the right tools, it can give you all of this information and as well save you time. It's worthwhile exploring. And the big question is, why this particular webinar? Why should this be a subset and a webinar by itself? Why should it be even a CPD session by itself? As much as we continue to talk through this as someone who's talking about important subjects within the benefits of practice management, legal accounting, some of the best practices that need to be taken care of, we often hear stories around how there's lost revenue in a legal firm due to not being able to recover expenses in time, which directly impacts the bottom line of that firm, especially if it's a small legal firm and if they're not using the right tools, and if it's a manual process, whatever may be the situation that's led to being a manual process, the end outcome sometimes results in loss of most time as well as loss of money. So today's webinar was really to remind that there's enough help in the market today, whatever specific tools that you may explore and that may be convenient to you to use, that you do go out there, explore the marketplace, and get the right appropriate tools that can help you so that you don't lose that money, you don't let that money sit on the table. Do the steps that are required on a timely manner so that you're efficient and profitable at the same time. So the benefits of really managing disbursement really comes down to having a better top line, because you've spent this money and you don't want to lose that money just because you did not take a few important steps to recover that money from the client. Right? Because at the end of the day, this was an expense that your firm paid on behalf of a client for a specific matter for that particular client. And as I've repeatedly said, this may be a little bit boring to the ears right now, but it's important that it does affect the profit margin, because if you don't recover that expense in time, it's considered as an expense to your business. And of course, we spoke briefly about the risk of paying for disbursements with your general account. And hence, if you are actually dealing with the general account, it becomes even more important that you actually are on top of these details. You capture the moment, report the invoice, ensure that you're getting paid, because you're already at the risk of non-payment. And to top that, if you do not generate this on time, then you're actually increasing that risk of non-payment as well. Okay. So I know we've given ourselves enough time to maybe use, I'm going to be using uLawPractice just as an example. It's not to showcase the product's features or functionalities. This is just to outline specifics with regards to disbursements. But yes, we are a Canadian legal accounting, practice management, and a business accounting software for legal professionals across Canada. And for those who would like to explore the use of the product, we do offer a 30-day free trial. Before I jump from my presentation slide into my demonstration, I will do a quick recap for those who did join us a bit late. Today's webinar, the topic of today's webinar rather, is Disbursements Demystified. It is accredited for 1 hour of professionalism CPD credits in the province of Ontario. And you would log into your respective Law Society portals, and this is the title that you would search for, and that's the title that you'd use and get your 1 hour CPD credits. If you do have any challenges in that, please do email us at support@uLawPractice.com, and we will do our level best to help you out with that situation. One of the questions is, can uLaw generate all of the legal accounting documents that a licensee would require for an audit? And the answer is yes. We are able to generate all of the documents that are required, in fact more than what's required specific to Law Society compliance. So now let me jump from a presentation mode, and I'm going to open my uLaw account, and I'm logged in as a fictitious legal professional, Mr. Roger Moore. What I've done to save time is I've already done a client intake. I've added a client by the name Mr. Brian McDermott, and I've actually created a LATB file for Brian. I've called it Brian was his bill, and assuming that Brian is the landlord, Bill is the tenant, and it's really an eviction for tenant, we can of course create other matters. But really the first step, the prerequisite that we speak about is creating the client, creating a file. So let me jump into the particular matter, as you can see, for Mr. Brian McDermott. Okay, there's actually a question around conflict screening. Of course, it's not related to today's particular webinar, but I'll kind of give you, the conflict screening is done right at the client intake level. You can do that conflict check before you create the file. So it's a good question, yes, but you would do that prior to actually creating a file. Okay. Assuming that, I'm just making the assumption for today's context that you have done the conflict check, you have found there's no conflict in representing Brian, you've gone ahead and then created a file as the subsequent next step. Now before you get started, of course, with the docketing and dispersing, as I mentioned, you would go ahead and generate the appropriate engagement or retainer letters. Because we have a few samples that you can, of course, repurpose. You can bring in your own template because we help you templatize it within uLaw as well. And we have some other samples that you can use. So let's start with a simple example where it's a flat fee and we've accepted a retainer that includes the fee and the possibility of a disbursement. So a slightly lesser, riskier situation. So we'll start with that for this landlord and tenant. So let's say we've agreed upon a retainer. and we've accepted that retainer where it's $500 plus tax, $565 plus $100 for, let's say, a court fee. So you accept $665 ahead of time as a retainer, which you as a legal firm thoroughly understand and appreciate will be totally repurposed, right? So there's no refund of this retainer at all, because you know this is really maxed out. Of course, the customer may have paid you a check that then you deposit into your trust account. You can also accept that payment using a credit card if you use any of the third-party gateways that you may want to integrate with, such as Global Payments, TD, Pivotal, Moneris, etc. Otherwise, the old school way of accepting a check and getting that money into your trust account. Okay, so you can give them a receipt for that trust retainer. Very important. So now you've got $665 that's deposited, let's assume, into the trust account, and that's the amount that you have to play with. Let's assume you've, of course, done all of the docketing. You could have done multiple dockets, or you could just have docketed in a single line item of all the work that's done. So let me just say closure of file, and you could say initial meeting, second court visit, documents drafted, and final closure. So again, I'm just making this up, of course, but this is really the total summary of all the tasks that you've accomplished in this particular matter. You could say as a total that you spent 4 hours on it, and a flat fee of $500 before tax. Let's assume that's the docket, right? So, and because this is a landlord and tenant board, I'm also going to give you that first use case or the assumption that we're going to include the disbursement as and when it happens. So what I'm going to do now is, now there's, as you can see, we've got $665, and with this flat rate $565 docket, there's still $100 left. And when I actually come into my disbursements, I'm going to add a new disbursement. And the first question really is, do you want to pay for this disbursement out of your trust account, or do you want to use your general account? For this particular example, I would say I'm actually paying from trust, which really means that I'm actually writing a check for $100. So this could be a certified trust check. Check number, which basically says court fee. So it really comes down to the date. So if you look at the details, even if this is a trust disbursement, if you look at the details, we're still capturing the date, the amount, the method of payment. So of course, this being a trust, comes out of your trust account. What was the purpose? So a short description of what was the reason for this particular disbursement, and who did you pay this to, right? You could say I'm paying this to the Ministry of Attorney General, and you may have multiple trust accounts, so it really comes down to which trust account was used. Many legal accounting systems, including uLaw, do allow you the ability to even print this check. Okay? So I'm going to say, yeah, that's the payment I made for $100, and you're going to now notice the trust receipt drop from $665 to $565. Technically, when that check is sent to the Ministry of Attorney General and when they encash that check, that's what's going to be left in your trust account, because you've yet to generate an invoice, and hence you're yet to recover this $565 of legal fees, which is through that trust transfer. But the $100 disbursement, Now that's already gone. Okay? So now when I go ahead and I generate the invoice, of course it's a great habit to generate a preview so that you or your legal firm clearly understands the story that this particular invoice is going to tell your customer. So, of course, that's the docket, a single docket for 565. It's got the $100. So this is all the transactions that are relating to the trust account. So you've got a new retainer, a deposit of $665, and you've got a $100 payment for that disbursement coming out of it, clearly telling your customer that, of course, they don't have to pay anymore, but letting them know that 565 is what you're going to move from trust to general. You can go ahead and basically complete. I will show the description. I can even mark this as paid. So this is the first example where you do not have to recover the expense for this disbursement because you utilized the vehicle of that of being a trust retainer and disbursements included in that initial retainer to pay for that disbursement right out of your trust account. Okay? Here's the actual invoice, clearly telling you the description, the total amount, with the paid stamp on it. The only last step that's left to recover the 565, of course, is to do the eligible trust transfer. So you would go ahead and transfer that 565 from the trust account into your general account. Now let's look at the next example where there's no trust related, or maybe there's no payment out of your trust account and there's only a general account that's related. I will go ahead and create a new matter for the same client. And we'll call this a small claims matter. And I would say this is share with neighbor. And let me go ahead and save that. In this case, I'm just going to go with the second use case with the more risky situation where there's no trust involved. You're just going to be paying for these disbursements out of your general account. And let us look at some other types of disbursements that there may be involved. Okay, so maybe you don't even have dockets to begin with. You're just beginning with some disbursements, and you can do that. There are invoices with cycles where there are only disbursements that are being incurred. There's not even dockets or legal fees involved. So let's say the first is you're actually paying for photocopies. So it's really a unit rate for certain documents that you photocopied. So when you pay from general, again, the details remain to be the same. When did you pay for it? What was the reason for this? So this could be photocopies. Of course, you can see that this becomes really how much did you pay for it. Are you including taxes? Depending on which province that you belong to, you can change the tax code as well. Or it could be tax exempt. Right? So there's many different reasons for that. You can even give it a description of what was the photocopy for. Now, the top part is, of course, dispersing the client. Now, as a business, you have, of course, either paid for this particular expense or you have incurred the expense. So, for example, if these photocopies were sent right out of your office because using your photocopy machine, you generated these photocopies, then there's really no expense that you paid for explicitly because it's all part of that office photocopying system. Then you don't have to report that as an expense. You can go ahead and just say $11.30 was the disbursement for that particular photocopy. Okay. Now let's take another example of where you had to go fax certain documents on behalf of this particular client as a disbursement. And it so happened that the fax machine in your office broke down and you had to travel to the closest Walmart, Staples center to actually go ahead and fax the information. So how would you go about showcasing that, right? I'm going to go ahead and do the same thing here. I'm going to say this is fax. And I'm going to charge you $20. You could do a unit rate as well. Now the bottom part, let's say you went to the nearby Staples to pay for it as a business. Maybe you ended up paying more than what you had bargained for. You can put that in separate and also tell your own bookkeeping system as to how you paid for it and who you paid this to. It really comes down to the question of which bank account did you use. And if you've used your personal money, as we discussed, then you could say, I paid using my owner's pocket. Though the disbursement was for $22.60, the actual payment was for $33.90. So it actually is, give or take, about $11.30 of loss with this disbursement. Again, this is just an example. This could be even with a profit. But the bottom line is that you've now had two disbursements for which you've already paid for. One was for a photocopy from your machine in your building. There was another disbursement from General for your fax, for which you went outside your building to pay for, and you actually incurred an explicit expense. Now it's important that you actually generate that invoice, because let's say this just happened yesterday, and you can even go ahead and edit that date, capturing the moment. Okay. Now, as I mentioned, you've captured all the details, captured it as and when it happened, and the next step really is to go ahead and, there you go, to actually generate the invoice. So I'm going to skip the pre-bill because I've already done that. I'm going to skip the preview. So now I'm generating the invoice as and when it happened. So you generate that invoice, and the client now owes you $33.90. Now you would email this or print this, sign this, and send it to your client, and expect for the client to pay you. Right? So here's this particular invoice for this particular client for this particular file was $33.90. Of course, if you've got a payment integrated, the client can just pay this themselves at their own leisure using a link to a credit card that they could use. Okay. So let me go ahead and accept that payment. Got a credit card payment. I'll get the payment reference. From the credit card payment that I just received. I'm depositing it into my general account. So it really depends on where that money went to. Now you can see there are two different matters, and it's associated with the matter for the slip and fall. Give them a receipt for the payment. Typically you should, but for purposes of today's time, I'll just go ahead and accept that payment. And that $33.90 was taken care of. You incurred the disbursement, you captured it, invoiced it, accepted the payment. So let's do some other examples before I jump into finally showcasing the documents that are now generated behind the scene that are important for you to tell the story to your auditor about the audit trail of these disbursements. Okay, so let's capture another disbursement, and we'll say from general. There's an example of a photocopy with so let's say it was $10. Let's say you only paid $5 with no taxes. So this is an example where you actually are charging your client $10 where you only incurred $5. That makes it a $5 profit for your business, right? You only paid through your office $5, but the top part is where you're charging your client for $10, which is $5 more. Now this is a good example if you purchased any software as a bulk discount. So if you use individually to each customer, but you've actually purchased the software as a bulk discount, this would be a great example for where you would introduce a profit margin for the disbursement. In this case, instead of owner's pocket, maybe I used my business credit card. Let's say I've used my American Express credit card, which is a business credit card that I used to pay for this $5 to Walmart. So this is an example with a profit. Now let's use another example where we've actually paid taxes as well. So we'll use maybe an application fee. But again, I don't know if application fee typically involves a tax. The $5 invoice the profit would not show up on the invoice. Of course not. I'm going to do an actuals, in fact. So I would say tax exempt. And I would say paid to Ministry Finance. And this time I'm going to say it's coming out of my general account. And I wrote them a check. So there's going to be a variety of disbursements that are involved, depending really on the nature of the matter itself. So keep in mind that you first have the option between trust and general, and then comes the necessary details that you need to capture. And finally, depending on whether you use trust or general, you definitely would have to generate an invoice. If it's trust, you basically just are paying from the trust account, so you don't have to recover it. If it's out of general, you generate the invoice, and you do have to explicitly ask for payment. So I'm going to complete the last but one step of generating that invoice. And as you can see with this matter, the nature of the matter, I'm generating the invoices as and when they happen. If they're not specific to this matter, if it's a monthly cycle, you can actually generate it at the end of the month. In fact, we have an option right under invoice which says backdate. So if you've passed October and you're generating an invoice for October, the 1st of November, you can actually choose the back date to end at the end of October. So here is my second invoice for that same matter. The first invoice was for $33.90. The second invoice is now for $110, $10 for the photocopy with no tax, $100 for the application fee, no tax. There's a previous audit trail of a client payment that we received through a credit card payment for $33.90, and that's what's left. Let's finally accept that payment, assuming that we either made the phone call or they actually called you and gave you a credit card number, or they paid it, or maybe in this case they sent us a check that then you deposited into your general account. So all of the information has been captured, invoices generated, payments received. So typically, let's assume there were dockets. I'm not going to even get into it with the limited time that we have. You could technically mark this as a closed matter. Send them the statement of accounts, settlement accounts, whatever is necessary to close the matter, and move on. Now the last aspect of where all of this information, so all this happened, right? So this could happen in January, and now it's been 10 months, and your auditor comes to meet you in November. So just having the confidence that you had the right process to capture all this information in the appropriate channels, keeping the confidence that you have a tool that can help you with providing you with the documents, you generate all of the compliance documents. And to answer one of the questions from one of our audience members, here is, you can start with the trust receipts, which is the ledger, or I can do the client's trust ledger. Typically, the auditors would ask you for a date range. So they would ask you for, give me the trust ledger for the month of September 2019, August. Rarely, depending on the nuance of a matter, they may actually ask you for a specific file. Okay? So in uLaw, for example, you can do both. You can do it for a specific date range or a specific client. I'm just going to do it for the date range. Here is the trust ledger. I'm going to generate a general disbursement for the same time period. And you can see when you do it for a date range, you're doing it across all the matters that have been transacted in that date range. So you've got David, you've got Charda, Johnny Walker, and here is our client, Mr. Brian McDermott, and more importantly, it is for a specific matter. And now you can see where a disbursement was made from the trust account for $100 towards that court fee, which is now captured in this document. And what does this tell a story? It tells you the story that you used the trust account to pay out $100 towards the court fee for this client for this particular matter. And in fact, it tells you that you're yet to do the trust transfer of 565 of eligible trust transfer from your trust to general. So an auditor may actually catch that and in fact help you in letting you know that that's the eligible money that you can actually move from trust to general. Okay, that's the story that this particular ledger is telling you. And if I look at my general disbursement journal, for example, here are all the pieces of information that we've generated today. So you had an application fee for this particular matter, file number 512550. You had a $30 fax that you paid Staples with a tax of $3.90. And then there was also a photocopy of $5, clearly telling you the disbursements. Now if I were to go into my fee book and generate that across the date range of today's month, this would also tell you a story, and that is for this particular client, Brian McDermott. Of course, this is let me just expand on it real quick. Oh, there you go. You can see there are two different matters for the same client, and that's why it's important to capture the file number, because then you can cross-reference. So you had Brian McDermott, the first file of 173136, which I believe was for the landlord and tenant, where you actually paid the $565. There was a disbursement of photocopies for the next file number, and that was for $10 with a tax of $130. Photocopies, application fee, and in fact a fax as well. So all of that. So as and when you entered the details of the individual disbursements, depending on the nature of what account that information was derived out of, the appropriate ledgers and journals technically are generated automatically as well. So kind of with that, I wanted to just give you really a feel for what you should keep in mind the next time you're dealing with disbursements, best practices of capturing the information as and when they happen, having a plan of what account to use for which nature of business, for the type of matter there is, and you can actually mix and match both trust and general. The one experience that we've learned is it really goes a long way if you can afford to have a separate business card, especially if you're paying out of general, to actually have a separate business credit card just for disbursements that are expenses related to the client. And you can basically just mark this and give it a nickname even. You can basically say disbursements credit card. So you use one business credit card to pay for all the disbursements because that makes it easier to reconcile that one particular account for all the disbursements that you rendered. Okay? So with that, I'm going to wrap up today's webinar. Again, today's webinar will be recorded and will be available to you on our YouTube channel. The title of today's webinar is Disbursements Demystified. We hope this was an informational session where we covered what are disbursements, how do you use the trust account to pay for disbursements, how do you manage disbursements out of your general account, some of the general types of disbursements, including billable unit rate that we actually were able to demonstrate. And last but not least, some of the key documents that are definitely expected by the Law Society as part of an audit, whether it's spot audit or a plan audit, to showcase the audit trail as well as the story behind the transactions of these disbursements. Okay. So once again, 1 hour of CPD credits for professionalism CPD credits in the province of Ontario, British Columbia, and New Brunswick. Thank you, everybody, and we look forward to seeing you at our next webinar next Friday. Thank you. Thank you very much.